They told you crypto was dead. Again. They said the party was over, the dream was finished, and the smart money was already gone. Then today happened. Bitcoin dropped hard, markets shook, fear flooded timelines, and suddenly everyone remembered why crypto is not for the weak. This is not a story about prices falling. This is a story about power, pressure, and what really happens when money, politics, and fear collide in real time. Today, Bitcoin fell sharply, sliding roughly 7% in a matter of hours, briefly trading in the low $80,000 range. Billions of dollars in leveraged positions were wiped out across major exchanges. Ethereum followed. Solana slipped. XRP dipped. It wasn't just one coin. It was the entire risk market pulling back at once. And this time, the trigger wasn't a hack, not a scam, not some fake rumor. It was macro reality hitting crypto straight in the face. The pressure started with uncertainty around the United States Federal Reserve. Speculation around future Fed leadership and interest rate direction sent shockwaves through global markets. When traditional markets flinch, crypto doesn't stand still. It reacts faster, harder, more violently. Investors rushed to reduce risk, and crypto, still seen as a high-volatility asset, took the first punch. This wasn't panic selling from beginners alone. Data showed forced liquidations from over-leveraged traders who bet too aggressively on non-stop upside. Long positions were flushed out. Stops were hit. Algorithms kicked in. What you saw on the chart was not emotion. It was math. Cold, fast, unforgiving math. And yet, beneath the chaos, something important happened that most people missed. While prices were falling, infrastructure kept moving forward. Exchanges didn't shut down. The network didn't stop. Blocks kept confirming. Transactions kept flowing. The system absorbed the shock and stayed standing. One of the most telling developments today came not from price action, but from strategy. A major global exchange publicly announced its expansion beyond pure crypto trading, positioning itself as a broader financial platform. That move wasn't made in fear. It was made in confidence. When companies invest during downturns, they're not thinking about tomorrow's candle. They're thinking about the next decade. This is the part no one explains when red numbers fill your screen. Volatility is not a glitch in crypto. It is the feature. It is the cost of early adoption, the price of freedom from traditional systems, and the test that separates conviction from curiosity. When Bitcoin drops 7%, headlines scream, collapse. When traditional markets lose the same percentage, they call it a correction. Language matters, narrative matters, and today's narrative was shaped by fear, not facts. The fact is, Bitcoin is still trading at levels that would have been unthinkable just a few years ago. The fact is, institutional participation has not vanished. The fact is, regulatory conversations are still happening behind closed doors, not to kill crypto, but to control and integrate it. Governments don't regulate things they believe are going away. They regulate things they cannot ignore. Look closer at on-chain behavior, and you see a different story. Large holders did not all rush for the exits. Some wallets added. Others stayed inactive. Smart money doesn't chase green candles, and it doesn't panic on red ones. It waits for moments like this, when emotion is loud and logic is quiet. This sell-off didn't erase crypto's purpose. It reminded everyone what that purpose is. Crypto was never designed to be comfortable. It was designed to be independent. It was built to exist outside traditional permission, and that means it will always react strongly when traditional power shifts. The market today didn't ask if you believe in blockchain. It asked if you understand risk. It didn't care about your favorite influencer's prediction. It only respected discipline, patience, and positioning. And here's the truth most won't admit. Days like today are necessary. They flush excess. They expose weakness. They reset expectations. Without these moments, bubbles grow silently until they explode violently. Controlled pain is healthier than unchecked euphoria. This is also why experienced traders don't celebrate non-stop green. They respect red. Red creates opportunity. Red teaches lessons. Red reminds you that no asset, no matter how revolutionary, moves in a straight line. Crypto today didn't fail. It functioned exactly as designed in a global risk-off environment. Liquidity tightened. Speculation cooled. Weak hands exited. Strong hands waited. And tomorrow? Tomorrow doesn't belong to fear. It belongs to preparation. The people who survive markets are not the loudest voices on social media. They are the quiet planners who understand cycles, who respect macro forces, and who never confuse short-term pain with long-term failure. This moment will be replayed later as just another dip on a long chart. The panic posts will be forgotten. The screenshots will fade. But the positioning decisions made today will define portfolios for years. Crypto has always been a mirror. It reflects human psychology faster than any other market. Greed shows up instantly. Fear arrives without warning. Discipline takes time. And today that mirror was brutally honest. If you're looking for certainty, crypto will disappoint you. If you're looking for growth, it will challenge you. And if you're looking for transformation, it will test you harder than anything else you've ever invested in. The market today didn't reward hope. It rewarded understanding. It didn't care what you wanted. It responded to what was happening in the real world. Interest rates, policy speculation, liquidity shifts, real forces, real consequences. This is the cost of being early. This is the price of playing a global 24-hour market that never sleeps and never forgives ignorance. But it's also the reason crypto still matters, because it is alive, reactive, and deeply connected to the future of money. Today wasn't the end. It was a reminder that crypto doesn't move on belief alone. It moves on reality. And the people who last are the ones who learn to read that reality without panic. Fear came fast today, but fear always does. What matters is who stays when it leaves.